Here's some news. In a moment of brutal honesty at a zero hedge, JP Morgan says economic disaster and more lockdowns will be great for stocks. This shows that the whole MMT has really provided the candy coming out of the Fed for all the banks, and it's hollowing every day at this point in terms of where they think proper spending should go. On March 27th, Trump signed the $2.2 trillion Who Cares Act, and this combined with a breathtaking array of asset purchase programs, that's the bag holding all the candy that's coming out for the big banks, for all those in the big club that we're not in, marked the effective start of MMT with the Fed and Treasury coordinating policy. And MMT has a number of different parts to it, but it's basically saying we can print money, we can spend money between the Fed and the Treasury working together and try and shore up now, going so far as instead of just putting money into the economy, they're now getting involved with asset purchase programs and trying to influence other ways in which the central and commercial banks aren't lending or working in the way that they want. There's current discussions for central bank digital currencies to be issued out of the central banks. Since when does a central bank start getting into all these programs here? I mean, this is centralized planning going on full rocket fuel and a complete change. We have a diversion from classic monetary theory to the new MMT. And this just makes it more official. We had it in 2007 and 8 with the bailout and the whole too big to fail. Well, now it's the too big to fail is becoming a bigger, wider blanket, and it's a deeper one, and it's just a big change in paradigm here, which is what we're seeing here, because now there's an expectation, which is being fulfilled by JP Morgan and all the really big commercial banks, that not only are they just too big to fail, they're just going to reap rewards in terms of availability of funds, in terms of being rearrangement of debts or asset purchase programs. The tools in the toolbox of the new MMT are growing with each and every month, it seems, that's going by with this lockdown. And it's changing the basics of our economy at the top level, and it's going to do nothing but further destroy the middle class as they actually want to support lockdowns, which is what we're about to get into right now. So right over here, based on this, here's our chart. Based on this, one can argue that gridlock is the best thing for stocks. Why? Because the more dysfunctional the presidency and the Congress, the more the Fed has to take matters into its own hands, which we've just explained. All these programs that they're getting involved with are unlike they've done in the past for decades. They had a limited scope, and they stayed very much in it. A lot of times it was just mostly related to interest rates. They don't even talk about that anymore. They're going way beyond that. In fact, it is this very logic that has allowed stocks to soar to all-time highs, even as the economy barely grew for the past decade and then cratered into the steepest contraction on record from the lockdown. Why? For two simple reasons. A surge in debt, which will boost stocks as it has for the past century, and two, if it's bad, the Fed will step in. So here, let's get into this green part. In fact, the worse it gets, the better it will be for stocks. And we're seeing this. Nobody can make any sense out of the current stock market, from the Dow Jones to the S&P, and that's why everyone's still calling for this thing to crash. But this is where we're getting an asterisk, a really big one, and you got to wonder, as MMT and everything's changing here, you got to keep this in mind, because the game isn't the same as it was before. The rules are being changed. It continues, and in a moment of brutal honesty from the largest U.S. commercial bank, JP Morgan, Nick Penna, I'm going to screw you, who is clearly tired of goal-seeking why every single political scenario would be bullish for stocks, admits that even another economic catastrophe, which is what we're about to go through, especially if we get Joe Biden in office, let's just be honest about it, because of the lockdowns, such as a new round of lockdowns, will be great for markets. To wit, although it has had a negative impact in the short term, the reemergence of lockdowns and resultant growth weakness could bolster the above equity upside. Our charts up here over the medium to longer term via inducing more QE and thus more liquidity creation and also more asset purchase programs. For those who don't believe us, here's the original. So this is right from the JP Morgan website on flows and liquidity, and they get into it right here. Although it has a negative impact, this is what we just read. So here's a green mark. Yes, JPM did in fact state what tinfoil blogs have been saying for over a decade, that the worse the economy gets, the better it is for risk assets, as the Fed has no choice, which is not true, no choice but to step in and keep bailing out bulls as the alternative. A full-blown market crash is simply an inconceivable scenario for a country where private sector financial assets now represent a record 6.2% of the GDP, which has been growing and growing. So they're feeling more and more obligated to become more and more centralized, to be more and more a cash cow safety net, another TARP for which the big banks and even now full institutions, if you want with the quotes, an entire stock market as an excuse to prop these things up. And then getting here to wrap up, the upside for equities over the medium to long term depends on debt and liquidity creation and thus central bank QE, then on fiscal stimulus. So here they are taking a change in a paradigm in terms of what they're supposed to do, what their scope is and what it isn't, and rewriting the rules, getting rid of the old scope, and bailing out their buddies, and maybe not, that somehow this is going to be helpful to keep up asset prices while we go into another lockdown, which is going to crush another who knows how many millions of people, as well as hundreds of thousands, if not more, businesses that will go bankrupt throughout this winter. In yellow, it also means that the virus resurgence and the reemergence of lockdowns and growth weakness could bolster the above equity upside via inducing more QE. And so, as in conclusion, for all those wondering why the powers that be certainly should want Biden to win the presidency or rushing to enforce another full-scale lockdown of the economy, the answer is simple. They want to get even richer. Meanwhile, all those tens of millions of Americans who will certainly lose their jobs again, and their businesses, their small to medium-sized businesses, and all those proprietors of small and medium businesses who will see their companies snuffed out, well, for a handful of ultra-rich to get even richer, others have to lose it all. This is not capitalism. This is a centralized spin takeover, which has some sort of elements of fascism to it, at least as it relates into the financial structure of the government being intertwined with big business. I mean, they're having to purchase assets, stock equities, to prop up the whole market, makes them our Fed Treasury owners of our corporations. So this is we have fascism here, we have communism from the other side. If you go back 100 years ago, they were just two parts of the same coin. Fascism does better economically rather than classic old communism, but the far left are also now the far right. And then real capitalists are in the middle, real Americans are in the middle, saying we want real capitalism, we want real choice, we want freedom of speech, and those things are going away. And depending on what happens in this election, we might be able to stave off things for 4 years, but ultimately some type of blowback has to happen, because the central planning that we see with the IMF, WEC, the Great Reset, everyone from there to Kamala Harris saying we need a communist outcomes. This stuff is way out in the open right now, and you need to lock and load your financial portfolio and get yourselves ready to change and think in a way that you've never thought you would need. And until next time, be seeing you.